Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for 8/25/2024. That's August 25th, 2024. And we are wrapping up this summer, but we have had a lot of volatility. I know a couple months ago, I promised how much volatility we'd have this summer, and I think it over-delivered. I think volatility is over-delivered in this market, but it's not over yet, and liquidity is going to be poor, and we still have so much to talk about. And as you can see right over here, we've got a lot happening this week. Nvidia earnings this week. We have consumer confidence, durable goods. It's a PCE week, GDP data. It's month end. So if you think it's going to get a little bit calmer, not after what happened on Friday. Now, I'm going to talk about here in a few moments, so make sure you don't go away. I'm going to talk about not fighting the Fed and what the most important lines were in Fed Chairman's speech on Friday. I'm going to talk about what those were, and I'm going to show them to you. I'm also going to talk about why that's important for the dollar. Retail market, retail FX traders are very, very long the dollar right now. So that's another reason not to fight the Fed. And, you know, when you're, I'll talk about the dollar a little bit more greater detail. So make sure you stick around for that. Like I said, we have Nvidia earnings this week. There's just a lot of volatility. And I want to say, if you guys haven't, taken advantage of the trader funding program, you should. And the reason why I mentioned that, let me get rid of this screen for us really quick. The reason why I need to mention the trader funding program is just because I was meeting with another one of our traders this week, met with a bunch of them this week, one of them who just started with the trader funding program. And he said, as a young father, he feels so much more at ease trading an assessment, trying to access larger amounts of capital because he has a young family. And he's like, so this made sense to me. He's been trading FX for the last 8 years. And Carlos, if you're listening in, this is stories about you. But he's like, hey, I just feel so much more at ease trying to access larger amounts of capital, and I know it's not my own money. And this way I'm not putting my own money at risk. So if you want to learn more about the Trader Funding Program, make sure you go to traderfundingprogram.com down below. There's a video there that I talk about how I pass an assessment, or the tips that I follow that might help you to pass an assessment. And then also, for anybody who's new to the Trader Funding Program, you get a one-on-one consultation with me. I call it an onboarding, where I can just tell you what type of tools you have available, what to expect. And if you're going for a reassessment and and it's a $100,000 to $1 million assessment account, you're going to get another one-on-one consultation with me. I've kept them about an hour long, and we talk through some of the issues you had the first time around. So this way, maybe I can give you some tips on how to pass an assessment the next time. So kind of give you a heads up on what I would do based on the way that you trade the market. So make sure you check out Trader Funding Program. It's such a great opportunity for those people that want to access larger amounts of capital and not put their own capital at risk. All right, let's talk about. Let's actually go into the speech on Friday and talk about the title of today's video. Don't fight the Fed, especially if you're a dollar bull. All right, now if you look at the Fed chair's speech and you read it, right? This is probably the most important part of the speech, right at the very beginning. And I'm gonna go ahead and remove me from the video. And you'll see. I'm just gonna read this to you. Overall, the economy grows at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks on both sides of our dual mandate. Okay, the time has come for policy to adjust, full stop. The direction of travel is clear, and the timing and the pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress towards price stability. With an appropriate dialing back of policy restraint, there's good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. That was the most important part of the speech on Friday, to me anyway. And if you disagree, jump down in the comments below and let me know why and what you found the most interesting. The reason why this is so interesting is because we now have a Fed put, at least for a little while. Now, when I say a little while, when's the next jobs report? The next jobs report is going to be in a week and a half or 2 weeks, basically. The first week of September. So we have basically 2 weeks till we get the non-farm payroll jobs report. Now, we'll have unemployment claims between now and then. We're going to see other labor data, especially all the ADP data. You're going to have some labor and inflation information and PCE, things like that. But really, it's the non-farm payroll number that the market's going to be looking at. And that's what the Fed's going to be really focused on. So that really gives us the next 2 weeks of what? Try not to fight the Fed, especially when the dollar is breaking down. You know, we have a country that runs a twin deficit right now. That's us, right? And so being the reserve currency and our debt to GDP at levels that are making people uncomfortable, the dollar is automatically going to be under pressure. Then we're breaking out of a technical formation. Then we have a Fed chair that says we are going to loosen. And the pace of it is going to depend on what happens with the labor market. Now, some of you may be in the camp that when the Fed, and I'm kind of jumping into this camp right now, when the Fed cuts rates, when they actually cut rates, the stock market might go down because they're cutting rates to curb, a weakening labor market. He just told you he was going to do that. The aggressiveness, I think, of how much the Fed cuts is going to determine how much the stock market moves or if we actually peak or not. But right now, for the next couple of weeks, before the labor market and the equity markets are just off of their highs. I'm going to come back to Nvidia. Don't worry about it. I was just looking at the chart before I started filming. We are less than 1% away from all-time highs. To me, based on what the dollar closed at and the lack of data that we're going to have between now and the jobs report, there are upside risks to the market at this point in time. As traders, we try to navigate around the current market environment. Matter of fact, every single morning when I get up, it's like somebody just threw a 100-piece jigsaw puzzle at me, and I'm drinking my cup of coffee, trying to put all the puzzle pieces together, all the information that I have current available to me to map out what I want to do in the markets. That's why as traders, we can be very flexible. I trade in both directions. I will fade the market, trade markets with rallies, fade the market, short the market when it's selling off. I'll do different things depending on the day and depending on the data that I have in front of me. We, as traders, have that flexibility. So right now, you need to exercise some of that flexibility, especially for those of you that are perma bears that persistently feel that the market is going to go down and it's fixed and the game is rigged and whatever your reasons are. Stocks are overbought. You guys got to put some of that aside, especially when we had events like what we just got on Friday, especially if you are perma dollar bulls. The dollar has broken down. Last week, we discussed it here on the week ahead video, and it is extending. And there are so many, the reason why I mentioned this about dollar bulls, there are so many people that are playing the dollar counter trend right now that are shorting the euro. And if you look at you can just go to my FX book or something that's like that, and you'll realize that the retail market is extremely short euros and long dollars. And that means there's probably going to be further pain. There's probably going to be further pain for those people that continue to sell stocks, at least in the near term. And remember, we're heading into an election. This is a very unique situation that we're in. So it's going to be a very, very volatile and fluid environment. And the best thing for you guys to do is obviously be listening in each and every day to the shows that we do that are free. They're free. You don't even have to be part of Forex Analytics. You can listen to our free shows. Now, we hope that you become a subscriber of Forex Analytics. That's what we hope happens. But if you go to where it says webinars, you can listen to the Flow Show. It's for 2 hours it's for an hour every European morning. All right. Or you can watch the F.A.C.E show, and you're going to catch my analysis with the rest of the team there. And that's at 8 a.m. Eastern every single day. We've been doing it for almost 8 years straight. So make sure you guys listen in when you can. And this way you can understand my point of view with the rest of the team as it's changing, especially if you're not in our community and you're not in our chat rooms and you can't have access to me every moment of the day, which if you are in the Forex Analytics community, you can chat with me about 14 hours a day. Those are about the hours that I'm in front of my computer. So with that being said, let's move along into what's happening this next week. You can use your Forex Analytics system, follow along in your calendar, read Live Squawk, read the analysis that's being pushed through the markets, that's updated every day, however you want to do this. But I'm going to go ahead and go through what's happening this next week. So first and foremost, on Monday, we're going to have German IFO, Norway's employment data, and U.S. durable goods. So let's start off, and let me get rid of this Fed chair speech. We're going to start off with the euro dollar, just because the euro dollar has closed in massive breakout territory. Not only are we breaking out from a triangle, we've broken out even from a horizontal standpoint. Now, at this stage in the game, you have to imagine that any dip back down to this red trend line, which if that's your previous triangle, however you want to look at it, if you wanted to look at it as this being the triangle or this red triangle, which we discussed last week, we've broken above it. So any dip now to 111, 110.90, you should find buyers at this stage. The next big target is going to be the 113 level. And you have to imagine when you're coming, and I want to talk a little bit about this because you can talk about this whether you're dealing with the dollar index, whether you're talking about the euro. We've just broken out of a year-long consolidation out of a triangle. It's really easy to measure what those types of moves look like. You can take a minimum expectation, which would be the last known low, right, that we had that tested triangle support, and figure out where the highs are. Or you can take the furthest distance, which would be right here. And in either case, you look at what those targets are as you come out of a triangle. They are not near where we're at. At either one of those targets, you're talking about a target to 115 or to 118. That doesn't mean we're going there tomorrow. I know some of you are probably went out of the weekend short euros, because you were short maybe all week. Maybe you shorted on Friday after Powell and you just said, well, I'm going to hold on to it for the weekend. Look at what those upside targets are showing us. Doesn't mean we're going to go there tomorrow, but over the coming weeks and months ahead, which literally could be weeks ahead or months ahead, we've got a lot further levels to go. Why are triangles so powerful? Because that consolidation that you see there, that's a lot of power. It's a stored up energy over the course of a year that's just been winding up. And now that the Fed says there's a clear path, that means he's cutting rates. The aggressiveness will be based on data. So now we know the door is open. So how far are we going to go between now and the jobs report is to be seen. But I wouldn't put past the market that we're trading at 113 or higher before we get to the jobs report. So just think about that as we go through today's video. All right. So with that being said, I'm going to keep moving along. We have Norway's employment on Monday. Look at this big move. Oh my gosh, just absolutely destroyed. Came back, retested the trend line. If you follow Forex Analytics via Twitter, you knew exactly when it was at 1060. You knew when it was going to bounce at 1049. You knew when it was going to turn at 1060. And now we are approaching some pretty key levels of support. Look at the long term of the US dollar Norwegian krona. Imagine this pent up energy and how far this one can travel if it really starts to break down. I mean, I think we're getting very close to breaking down at this point. If this is a channel, you start breaking below this 1031 level, and it could get downright dangerous. We could be single digit midget in the US dollar Norwegian krona in fairly short order. All right, continuing on. We have, like I said, US durable goods on Monday. You skip over to Tuesday, we have US house price index, consumer confidence, and a 2-year note auction. Matter of fact, this week, we have a 2-year, 5-year, and 7-year. So I'm going to take you real quick over to yields because this is going to have a little bit of an influence on what's happening in the dollar. But look at how yields continue to weaken. We've discussed ad nauseum the last couple months on this breakout in the 10-year. You can see the 10-year note just ripping here. And we are currently doing another triangle consolidation, which in this case, since we are trending higher, probably will end up resolving to the upside. So if the 10-year breaks out of this triangle this week, especially following a 2-year, 5-year, and 7-year note auction this week, is there a probability or chance or possibility that we can get to this long-term descending trend line over the up here over the course of the next couple of weeks? It sure does look like it. And if you think about but we're in such a severe downtrend, we are. And wouldn't it be normal just to trade back up to a 38% retracement in the 10-year before turning lower once again? That means we might still have some distance to go before the US dollar finds any type of buying, especially if it's yield related. Okay. Going into Wednesday, Wednesday is the 5-year auction. But Tuesday night for me, but it would be Wednesday in Australia, you have Australian CPI. Now, the RBA is one of those central banks that they're not cutting, but they haven't ruled out hiking again. They haven't ruled that out. What happens if their inflation data ticks higher? Well, if their inflation data ticks higher, there's a good chance that the Aussie could break through 68 cents. And if we break 68 cents, there's a good chance that we could trade up towards 70 cents again. And is that uncharted territory? No. Is that a breakout of a triangle? Yeah. And could we go a lot further than that? Sure. But first things first, above 68 cents could really fortify a breakout. That would be Tuesday night if you live in the US or in North America, Wednesday morning in Australia. Fast forward to Thursday, we have US GDP, US unemployment claims, US pending home sales. So I'm just going to give you a quick view of the dollar index. The dollar index is in breakdown territory, obviously. The next support is just below 100 at 99.50. Big support zone. You can see it. I'll just zoom in. We break through that support zone this week. If data continues to deteriorate, then that's when the real selling starts. That's when you can see the dollar index trade back down towards the mid-90s. So do I think that's going to happen this week? I don't think so. But is there a risk that we make our way down towards 100 this week? Yeah, and just remember, the jobs report is in about 2 weeks' time, all right? One of the other things that's happening on Thursday is we have Swiss National Bank Jordan. He's going to be speaking. Now, the Swissy we've discussed on, this maybe being an inverted head and shoulder pattern. But the fact of the matter is there are still heightened risks overseas. I say overseas, depending where you live. Yeah, but we have heightened geopolitical risks all around the globe. Whether you're talking about the Israeli-Hamas situation, if you're talking about, Ukraine, Russia, and who knows who else could be brewing, China, Taiwan, your guess is better than mine. All I tell you is the Swiss franc is extremely strong, and that may get the attention of Swiss National Bank Jordan to a point where he has to say something on Thursday. So watch for potential hawkish rhetoric from the Swiss National Bank on Thursday, especially if the US dollar Swiss franc and the Euro Swiss, probably most importantly, continues to fall, right? That's something that I would be paying very, very close attention to come Thursday. Now, like I said, on Thursday, we also have a 7-year auction. Thursday night, which would be Friday morning, we have in Tokyo, we have Tokyo CPI. And if you look at the US dollar, Japanese yen, it continues to weaken. But, you know, if you're sitting here going, well, look at the yen really strengthen. Well, first and foremost, it has strengthened quite dramatically. But if you're looking at all of the yen pairs, then your opinion may be a little bit different. Dollar yen stopped at the 38% retracement, which means that there's a higher probability of an ABCD move in the dollar yen. And if you just looked at the dollar index, you can pretty much draw a conclusion. That's what it means. That's what it could potentially mean for the dollar yen, especially coming off this week when BOJ Governor Ueda basically defended his work, him and the BOJ's work. And he's not cowering. And if data continues to improve, stay strong, Tokyo CPI included Thursday night, Friday morning, could the yen strengthen further? Yeah, and it might not just be a dollar yen story. It could be a euro yen, Aussie yen, New Zealand yen, pound yen, whatever yen trades you're taking. Excuse me. Okay, Thursday night, also Friday morning in Australia, you got Aussie retail sales. Friday, you have European PMI, or not PMIs, flash CPI, and US PCE, Chicago PMI, University of Michigan consumer sentiment, month-end flows, which I'll just mention really quick. Month-end flows, we have expected some US dollar selling going into month-end. So next week, you might see some US dollar selling as a result of month-end flows on top of the already breakdown that we've seen in the in a lot of dollar pairs. But we have Canadian GDP, and that's why I'm going to talk about the US dollar Canadian right now. Personally, I've been short. I shorted the breakdown, and I can't remember if I closed it out all on Friday. But regardless, we're in breakdown territory now, well below the 136. Well, you can just say the 200 DMA. I mean, it looks like the next targets are going to be somewhere between 134 and change and 133 and change. Now, a lot of people have been extremely, and I know I've showed it to you multiple times on the F.A.C.E show. I've showed you on the daily roundup, morning edge. You know, sometimes on the week ahead video, the CFTC positioning of Canadian shorts. That means hedge funds have been expecting this to move higher aggressively. It's the most aggressive Canadian short position by leveraged funds in the history of keeping data of the CFTC. Is it a surprise that they're all getting absolutely whacked going lower? No, especially when you look at Canada's economy. And if you're like me, I'm like, man, I don't know if I'd want to be a Canadian right now. Their Canadian economy looks like it's going to roll over pretty hard in the next year. But I think traders have been, and institutions have been really trying to sell Canadian dollars as a result. So guess what? They're finding themselves really wrong-footed in the market. So not only is it leveraged hedge funds, it's also retail. Retail is extremely bullish dollar Canadian. And so that you put all that together, it's no surprise that we're breaking down. And so trading the dollar Canadian back to the short side, even if the GDP number is weak, still makes sense to me. It still makes sense because it looks like we have further levels to go in the US dollar Canadian at this point in time. Like I mentioned just a moment ago, we will have month-end flows to wrap us up, for the month. There is expected dollar selling, and depending on how aggressive the stock market is over the next couple of days, if we get a breakout in the U.S. equity markets, that dollar selling for month end could get even stronger as we go into the end of the month. Okay, so now I want to talk about a few other markets, obviously. First thing we're going to talk about is we're going to talk about gold. Gold is maintaining. I know a lot of you are thinking, well, gosh, gold should be a lot higher. I agree. I mean, look at what's happening in the dollar. Looks like gold should be higher. Fact of the matter is, we're up against wedge resistance. And I'd have to think that we could get an accelerated move higher in gold. And the bottom line is any dip now down to 2,400 probably needs to be bought if we see it. But the fact of the matter is gold looks strong, which is going to drag up silver. You saw silver. We talked about it last couple of weeks when we broke above, or we had this Gartley pattern. Looks like silver can trade back up towards $31. That looks doable now. It looked possible last week when we talked about it. Now it looks really possible, right? Because we are, maybe another 10% higher from last week when we talked about it. Copper also firming up really, really nicely. We're holding well above the 200 DMA. Copper looks like we could trade back up towards 430, maybe even 440, maybe even higher than that. So all these precious metals look pretty strong. We talked about the 10-year. Let me talk about S&P really quick. So here we are on the S&P. Let me stop and say, first of all, if you're a trader funding program trader, you get to trade, CFDs of these instruments, whether you're trading crude, gold, silver, S&Ps, NASDAQ, some individuals, some other individual indexes. But the S&P is very close to all-time highs. We are going into election cycle. I know some of you have your opinions on how the market's going to react, whether it's a President Trump or President Harris presidency. Fine, have your opinions. But I think the one thing that we could probably all agree on is that it doesn't matter which administration comes in, fiscal spending is probably going to increase. So those twin deficits, as we talk about, might get accentuated a little bit more, which is going to just fuel the fire of bulls in the stock market as we head into the election. Now, once the election happens, are there different possibilities? Absolutely, and we're going to talk about those when we're getting closer to the election season, especially once we get past the first polls. What I want to say also, if you find these videos beneficial to you, and especially helping you plot out your week ahead in trading, make sure you jump down in the comments, tell me what you're thinking. Tell me if I missed something. Give us a thumbs up, the whole team a thumbs up for getting these videos out. It's Saturday, it's midday right now, and I just got off a soccer field, so getting this out to you so you guys can have this before the weekend. Our editors are working around the clock, and our social media folks are too. So make sure you give them a thumbs up and subscribe to this video and hit the bell icon. Because if you hit the bell icon, you'll be notified on your mobile device, on your desktop, when a new week ahead video comes out. And it's all free to subscribe, hit the bell icon, comment, hit the thumbs up button, like button. That's all free stuff to do. So please do it. I'd appreciate it. Me personally, I would. Thank you very much. All right. But you have the S&P, looks stronger. Look at the NASDAQ 100. It's underperforming, but especially with Nvidia reporting on Wednesday, is it possible, especially if Nvidia continues to surprise the upside and Nvidia breaks out and above its 78% retracement? If you don't know what I'm talking about, let me just go reference it. So if we break out above these highs around the 132 level, could that drag up the NASDAQ 100? Sure. How about Marvell Technologies that's reporting this week? How about Dell? Those are two names that are also included in the AI space nowadays. Those are two other companies that are reporting earnings that will have an influence on what's happening in the NASDAQ 100. So I'd say if we get above 20,000 or so in the NASDAQ 100, it's around the 78% retracement, we'll probably continue to rally. Look at the Russell 2000. Even the Russell 2000 wants to play a little bit of catch up. It's been underperforming, but yeah, we're still looking like we could probably go a little further, especially if we break this channel. You look at the Nikkei. The Nikkei has recovered. We're back at the 618, and it looks like the Nikkei could continue to recover back to 40,000. So there's a lot of money that's probably just waiting to jump back in the markets, especially if the S&P hits new all-time highs. One last thing I wanted to cover really quick is I just wanted to cover Bitcoin. Bitcoin, you know, we finally broke that 618 retracement. If you guys are in the Forex analytics community, you know what I'm talking about because I didn't mark it up here, but I will right now. There's your high, there's your low, and the 62,000 level had been capping Bitcoin for literally weeks. On Friday, we closed above it. We closed above the 200 DMA, and it looks like Bitcoin could make it back to 67, 68,000, which would be the top of the big long-term cup and handle formation. And look, if risk assets continue to rally, why can't Bitcoin hit new all-time highs? I'm just saying, and I'm not necessarily a Bitcoin bull, but I'm pointing out maybe what looks kind of obvious to a lot of you. I mean, this is a bullish consolidation, very shallow consolidation in a very strong, recovery over the last year and a half. Okay. Very strong move, and it looks like it might continue. So there's your Bitcoin. Now, this is the point that I want to talk about our reviews or our setups from last week. And remember, if you like these trade setups, make sure you give me a thumbs up, but comment down below. Maybe there's something that you're looking at that I wasn't seeing. Look, I'm just giving you 3 setups, not necessarily my best setups, but I'm giving you 3 setups for the week to give you some actionable ideas. So hopefully you're like them. Well, maybe you wouldn't like our first one because the first one was sell New Zealand dollar at the 200 DMA. I did. I shorted it. And guess what? I took a loss because I'm a trader. I shorted when it got to the 200 DMA, and then it went right above there. Fortunately, it was kind of quick. All right. So first one didn't work out, but the second one, the dollar MEX, I got pretty aggressive on the dollar MEX, and I sold it at 1940. Let me check. Let's see. Closed all dollar Mexican peso longs. My average was at 1910, because the reason why my average is at 1910 is because I aggressively added on the way up when I was long. So I participated in pretty much this entire move. And then when it got to 1940 or 1942, I sold it before it hit 1950 because I knew it was getting towards the 618 retracement. If you guys don't know what the 618 retracement was and you weren't in the chat rooms, as we were approaching that 618, I'm like, yeah, I think I want to get out of it. So, I played that. Hopefully you guys did too. One trade worked, one trade didn't. And the last one, Euro Canadian. Oh, by the way, if you want to know what positions I'm in, you can go into this is the Forex Analytics chat room for those of you that don't know. Like, for example, on Thursday, I picked up a quarter size euro dollar long at 111.07. I added to it on Thursday at 111.03. I picked up the pound dollar long at 130.86. And there's other traders that are posting what they're buying and selling in our Forex Analytics community. This is just the trades room. It's not even the normal chat room. So if you want to be in here and sharing your ideas and talking about what you're buying and selling and what you're trading, go to forexanalytics.com, take your $1 trial and use this for 10 days. Download the mobile app while you're doing it so you get all your notifications on your phone or your mobile device, your tablet. And jump in the chat room and be involved in our community. Because do you think it would be beneficial if you know what I'm trading? Doesn't mean you have to trade the exact trade that I'm taking. No, I wouldn't even expect you to. But if you knew that I was long the euro dollar on Thursday and I stayed long through Powell's speech, wouldn't that be important for you to know as a trader? Say, oh, Blake's long. I'm shorting it. Maybe I should ask him why he's long. And you can do that. I have plenty of conversations in the chat room about what I'm doing and why. And people want to know, I'm long this or I'm short that. So why are you, where are you going to put your stop losses? We talk about that in the Forex Analytics community. So make sure you're joining us there. All right, last one was the Euro Canadian. I have this one on the radar, and I still do. It didn't get close enough to 150 to buy it, but basically, last week I said while it's above 150, play it on the long side. So I mean, we're still above 150, and I think some people did play it on the long side. At least some people in the Forex analytics community did. So if you did, congratulations. I'd say it worked. I mean, because it's still above 150, well above 150, and the dips are very shallow. So, and if you picked it up on Sunday and you're still in it, you're positive. So 2 wins, 1 loss. Yeah, that's trading. Now here are my 3 setups for the week. So number 1, long euro dollar, any dip back down to 111.50 or 111.40, excuse me, and all the way down to 110.50, I think should be bought. So I do think that the euro is going to stall sometime up here before we hit this high, or whether before we hit this high at 113 or we hit it or not. I think we're going to stall, and then we'll probably have some back and forth price action. So I think you can be able to buy on dips the euro next week. The question is, how far are we going to dip, and are we going to dip? This is a big breakout for the euro. It's a big breakdown for the dollar. I'm long euros. I'm short dollars. And probably what most people are thinking right now is, are we even going to get a euro dollar dip? And if we do, how big of a dip are we actually going to get? So that's trade setup number 1, buying the euro, any dip down to 111.40, 110.50 maximum. All right, next, sell the dollar Canadian on any bounce towards 135.50 to 60. So meaning if we get a bounce like this, you have to sell into that, especially ahead of Friday's data in Canada. Last but not least, long the S&P. Now, S&P, a couple ways you could play it. All right, depending on what happens early in the week. If you get a dip to the 50 DMA, I think you want to be a buyer while you're above the 50 DMA. You see this little red line here? That's it. While we're above that red line, you probably want to be on the long side, or look for a breakout. And if you get a breakout, it's going to, probably break out at least to the 127% extension. So that means we're going towards, 58.35 or so on a breakout above the highs, because you're going to get a lot of people that are chasing the market higher after that, because it's breaking out, probably stopping out a lot of shorts. So I hope you enjoyed this week's video. Best of luck to you next week. It's going to be very volatile. So make sure you check out, Trader Funding Program. Jump in the Forex Analytics community. Come join us there. And again, if you like the video, give me a thumbs up. And I want to thank you for spending your time with me. I know it is your most valuable asset, your time. So because you're spending it with me, it does warm my heart. It makes me feel good. So I appreciate you being here. So thank you to you. I'll see you guys and gals Monday morning on the F.A.C.E show. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.